Well, happy Monday. Yeah, I know that's kind of a conundrum, but thanks for joining us here. I'm Marlon Bowling, your tour guide to the ag commodities. And we're coming out of the weekend and anxious to start a new trading week, although there is a lot of anxiety in the markets. And of course, I'm sure you're well aware of the bank closing, the Silicon Valley Bank over the weekend, and now another bank in New York. And just lots of nervousness in the outside markets, and that really kind of took a toll late in the evening trade. On the Dow. The Dow is in a tailspin. The dollar value is in a tailspin. I do want to show you one thing here. If I can go to the big board here, let's go to the crude oil market. Let's go to the West Texas crude. Believe it or not, April futures are down $3.62 a barrel right now at 73.06 per barrel. Yes, $3.64 lower, and it's still trading. So there's all kinds of angst, if you will, in the outside markets. And what that did was that took the ag commodity trade, and some of it had been trading higher overnight, and it just pulled it down into the close of the Globex. We have the May corn with the last trade of 608 3/4 down 8.5 cents. December was down 4.5 cents. In soybeans, you had May down 7.5 cents at 14.99.5. And yes, you heard correctly, it's under $15. And we had July down 8 cents overnight. Things looking a little dire there, well off of its overnight highs. We had November closing 9 lower at 13.48.5, and that means it's under $13.50. Just breaking some critical support levels psychologically. In the wheat market in Chicago, look at May going down 10 1/4 this morning at 6.69 after a high of 6.85 1/4. That's about 16 cents off of its overnight high. July down 9.5 cents. Kansas City has May down 11 this morning at 7.87 1/4. Had been at over $8 overnight. July closed 11.5 lower. And in Minneapolis, you had the May contract 6.5 lower at 8.18. July down 7.5. Whoa, that's a lot of bearishness in one overnight session. Let's bring in Brian Hoops of Midwest Market Solutions and try and decipher all this. Boy, I tell you what, the bearish floodgates were kind of letting go overnight. What do you think that daytime session may be like now, Brian?
Yeah, good morning, Marlon. Yeah, we've seen a lot of selling by some of the big fund traders coming into the markets and across a host of commodities. I think that will spill over into our opening this morning and probably weigh on the cattle and the hogs this morning, as in addition to the grains and the crude oil markets that you showed. There's kind of a flight to safety this morning with a lot of buying in gold and silver overnight. Those markets are sharply higher. And I think it tells us that, there's a lot of concerns about not only liquidity across the banking industry, but also with some of the funds and some of their money being held at different places. And they are kind of shoring up positions or at least raising some cash by getting out of some longs in the grains and crude oil and putting that money back into work into gold and silver. So we probably are going to see a sharply lower open in the cattle, and the hogs this morning are quite a bit lower anyway. And then you look at the charts, corn well off of its highs overnight. We're not that far away from Friday's or Thursday morning lows. And that's going to be kind of key support. Wheat, kind of the same thing. We're testing those lows that we bounced off of very early on Friday morning and late Friday night. So those are areas that are going to be key supports. No doubt there's sell stops sitting underneath those areas.
All right. So thanks for pointing that out. Everything basically closed on the low of the night. It sounds like if you're talking about South American weather, too, I hear they're bringing rain back into the forecast for eastern Argentina, but also into the southern plains. And as if we needed any more help on the bearish side, that could contribute to a little weakness in the markets too, right?
Yeah, a little bit, I think. You do have NOPA crush coming out on Wednesday, which will probably be pretty supportive towards the meal market. Soybeans to a lesser extent, we're back testing the $15 area in maize soybeans, which has been a supportive area so far. A little bit of rain in eastern Argentina is not going to help that crop out that much. We're still in retreat, which I think will be a longer-term supportive feature for both meal and for soybeans. Those will be the two strongest markets, but you look at Corn and wheat probably going to be the weakest legs here from kind of a lack of demand and that moisture moving into the plains. But it is going to be very cold this week and probably for another week or so, at least through the Midwest. So, there's a little bit of a longer term support for some of the new crop contracts as we may not be able to get in the fields quite as quickly.
Well, let's look at our livestock trade then when we come back. You already alluded to the fact that it may have a weaker tone. We'll talk about it right after this. Well, thanks for joining us once again here on a Monday and allowing us to be a part of your day. We always look forward to visiting with you about the markets. I'm Marlon Bowling. I'm talking with Brian Hoops of Midwest Market Solutions live cattle trade. Let's talk about that for a little bit. On the April live cattle last Friday, we headed into the weekend 52 lower. June was down $1.02, so definitely a weaker bias as we closed out Friday. Feeder cattle, we had the April contract down $1.50 at 197.65, and that was actually the strongest month. Bigger losses in the other contracts. And then on Friday, we finished with lean hogs up 237 on that nearby April at 87.45. Let's go back to Brian Hoops here. And if you look at the livestock summary, it looks like we had a fairly active trade on Friday, Brian, but prices didn't really venture very far, if at all, from the price that we had a week before, right?
Right. You're absolutely correct. It's a disappointment to the trade as well. We came in early part of last week anticipating steady at the worst case scenario, probably $1 higher type trade, and that didn't occur. We put our highs in on Monday and kind of languished or traded lower the rest of the week. And we're probably going to see some selling as a result this morning with that disappointment in the cash trade, what's happening in the banking industry, and concerns about the overall health of the economy. This is another thing to be concerned about. Most likely, cattle futures are going to open 25 or 30 cents weaker as we dial in steady, maybe even lower cash trade this week. But look at by the end of the week, we have a cattle on feed report, and that looks to be very bullish again as placement numbers could come in 10% less than year-ago levels. So your weakness in the futures is probably going to be confined to maybe today, and probably will find some support, some buying interest coming into the marketplace after some early weakness is digested in the futures market.
All right. Well, thank you, Brian. I appreciate the comments this morning as we get ready to kind of introduce what could be kind of a shaky market today. So buckle that seatbelt and be prepared for anything. I appreciate the help, Brian. We'll talk again. Brian Hoops of Midwest Market Solutions with us here this morning.